Good afternoon and welcome back. My name is Kyla P. Barnes, your financial chef and coach. I'm listening to the top 2023 hits on YouTube. Let me just decrease this. This song here is by Dua Lipa. This is the very last trading day of the year and the markets are closed. I don't know about you, but this has been a very interesting year. It's been a year in which, if you had the appropriate guidance and you were ready to make some moves in the market, even if you were just curious, this would have been your winning year. In this video, I'm going to cover about 7, 8 topics. I may be a little winded on a few of them, but I'll try to tighten it up. My energy is high, the time is high, it's the end of the year, and now it's time to rev up for that next year, you know? Two things happened really amazing this year. One, I produced my first book. It's called Pounds or Ounces, Your Financial Blueprint. It is available on Amazon.com. That book allows you to get a very clear blueprint of what I look at and also what financial data that you can look at to evaluate a security. It is important that when you are deciding what security to buy, you look at the financials, you look at the stock. You don't have to necessarily be a chart analyst, but you do need to give it some consideration. My book, Pounds or Ounces, allows you very simply to go through this book. I've had hundreds of people read this book, and they have been able to do it in like a 1-2 hour session, and they do feel armed with more information and they're ready to go forward. I have also grown my clientele in Jean Glace Art and Financial by more than, I think I'm at 31 clients now, so super excited. I can go slow, I got time. The other thing is I produced another book this year. It was called My $230 Habit. This is my trading journal from August and September. So if you're ever curious about what I do, how I did it, this is the book. This book is going to be more granular than the previous book. It's going to have more charts. It's going to have more digest of how to look at certain trades. It's also going to show you how I stay motivated throughout the year. This is my $230 habit and how I was able to pull off an over $75,000 trading year. Now, some of you out there may have traded way more than that, and kudos to you for doing so. But for me, I have other things to do. So if it's 221 trading days in a year, I say I was probably on deck for maybe 60% of that. The other times, I was just enjoying my life, and I'm okay with that. I want to review at the top of this video first market close. So the market's closed. It's officially 4:24 Eastern Standard Time. The market did close mixed, actually. I want to say that the S&P closed down today 0.28%. Let me go and look at CNBC, see what those numbers are showing right now. So CNBC is showing that the Dow Jones Industrial Average closed down 20 points today at 37,689. The S&P closed at 4,769. The NASDAQ closed at 15,011. The NASDAQ has had a phenomenal year. To date, I want to say, I wrote this down, so let me find the right number for you. The NASDAQ is up 43% this year. The Dow gained a 13.67% this year. And the S&P closed up 24%. These numbers are vastly different than the 2022 year, where the Dow was down 8.74%. The NASDAQ was down more than 22%. And the S&P, I want to say, was down 18 or 19% for the 2022 year. So individuals who have a passive strategy year over year for the S&P would have broke even if they had stayed the course. For the NASDAQ, they would have gained more since the NASDAQ closed up 43%. And for the Dow, I want to say that they would also be up too. They'd be up about 10%. But the thing is, why would you want to wait all that time to recoup your losses? That's why I spent time this year writing 2 books for the public so that it can break down things that I see, break down things that traders see, analysts see, as well as fundamental investors. Even if you didn't invest in the stock market this year, you could have also invested in cash. Cash had its highest rate since about 2009, 2010. The cash rate at this current time is 5.10%, but the federal funds rate is still at 5.25 to 5.50%. That is slated to go down in the year 2024, but as of right now, it's still hovering around the 5% rate. So if you were someone who had 1,000, 10,000, 100,000, 100 million, or whatever number that you have, and you were not sure of what to invest in, you could have put your money in a money market and produced 5% on that, or 5.1 or 5.2%. That's what the cash rate was telling you this year. If you were someone who were maybe investing in an I-bond, I-bonds at first were over 6%, and then there was an adjustment around May as well as October. I-bonds right now are paying 5.27%, so the rates are kind of stacking in with the liquidity rate for cash as well. If you were an investor who was interested in perhaps, let's say, bonds, at any point in time in the year outside of maybe January, bonds were going at a very steep discount because the rates have started to climb. But during the 2023 year, about mid-year, you could pick up a bond that was so significantly discounted. If you held it from the top of the year to about maybe November, that bond would have been paired with its losses. So you could have picked up a bond, let's say Ally Bank, or what else did I see? I saw one from Goldman Sachs. I saw one from JP Morgan. I saw one from Amgen. I saw one from Discover Financial and Lowe's. You could have picked up a bond maybe at about a price of 101, or let's just say $1,010. That bond did vary in different prices. At one point in time in the year, which was the middle of the year, that bond went from $1,010 all the way down to $980. Now you may be thinking that's not really a deal, but if you look at the price of that bond now, it's going at like $1,400. So if you had $1,000 again, let's use that same example, and you didn't want to park it in cash, you could have bought a bond at $1,010 or even the $980, and now it's going for $1,400. So from about March or April to October or November, a span of maybe 3 to 11, that's 8 months, or from 4 to 10, that's 6 months, you would have been able to produce over $300 in one bond. Not to mention that because it is more than 6 months in that time period, you probably would have been able to pick up a coupon payment as well. A coupon payment is going to refer to the interest on a bond. These are all concepts that I cover in both my books. I break it down at a level in which if you have never, ever, ever heard of any of these products, you can tell what this product is to someone as new to the game as a 10-year-old. And I know that because I tried it. Other things, as far as a sector basis, information technology went up 56%. Communication services skyrocketed to 55%. At the top of the year, JP Morgan did state that communication services was a very undervalued sector of the market. However, they made up a lot of time and they made up a lot of ground, closing up 55%. I'll stop right here and just mention, if you did not know anything about the market, when you see the sectors covered on the market, that lets you know that that is a performer at that time. Whether you're looking at a monthly or a year-to-date sector analysis, if you see one that is gradually going up more than, let's say, the money market rate, which is 5% for the 2023 year, then that means that's probably one you should probably look at closer, as well as maybe even consider if it will fit in your investment portfolio. Of course, review your risk, your time horizon, also review how much you're really interested in this particular sector, and if you understand the companies that are inside of that ETF. But these are very, very solid ways for you to produce more than the money in your account. You can either look at the market from a macro level or micro level. You can zoom in and look at it from a chart level, or you can zoom out and you can look at it from a mutual fund or a bond level. No matter what take you have, at different angles, we're going to see the same thing. It's kind of like if the sun is in the sky. If you're at a higher elevation, of course, you're going to feel more heat, but we all still see the same sun on the ground. Buildings may cover it. Of course, we may have some cloud coverage, but we still have the same vantage point that as a general theme, the sun is shining. And the same thing happens here. I heard the adage when I was in the office of one of my former colleagues say that a rising tide rises all boats, which is the same thing as whether you're looking at the economy from the macro level or the micro level, we're going to have the same takeaway, which is that, things are going up and things are improving. And while we're speaking of things going up and improving, we did see PCE decrease. That's the Fed's preferred measure of inflation. Inflation's hovering around 3.7%. That's definitely down from the high in the 2022 year. We also saw unemployment stay relatively stable. It went from about 3.4% to 3.7%. So it is still hovering in that area. And it also means that of all the layoffs in the economy, no matter how we think that when we go to apply for a job, we don't get it, or that there are more people out of work, the fact remains that the way they calibrate unemployment, it is still within the same range. Also, while we're speaking of same ranges, we have to take into account GDP as well. I have GDP coming in at 4.9%. That was one of the highest quarters for the 2023 year. GDP coming in at 4.9% was admittedly a surprise, and it did propel the markets higher. That means that the Fed can actually possibly move forward to this soft landing that they were looking for. Because as long as GDP has came out of the lower woods or the lower clearing of the woods around 2 and 3%, or mainly let's go with 2%, then that does look as though maybe perhaps if we can continue to move forward with the Fed gradually taking their hand off the trigger or off the pedal, and not necessarily rising rates higher or dropping them so fast precipitously that we find ourselves with businesses trying to float liquidity, trying to move around money, trying to not produce more money, which is what the economy is going to do anyway. But if the Fed is able to pull away their manipulation from the market, most sectors are going to be better. Anytime the market has to intervene, anytime Big Brother has to come in there and intervene, create policy to protect a certain class or also to protect certain entities in certain sectors of the market, it is going to control the outcome and it's going to push that back. Another thing that happened this year was Bitcoin. Yeah. Bitcoin had some really large advances. In fact, Bitcoin, I have here on my sheet, closed up 153.69%. That is highly aggressive. That's at a rate in which if they were to continuously produce that in 2 years, you would be up more than 3% on your money. That sounds fantastic, but to me, that also sounds like the tech bubble. So while a lot of people made money in Bitcoin, I personally did not buy Bitcoin. I may have at some point in time purchased a ETF that was close to it, but I never put more than 2% of my net worth in it. Did I miss out? Okay, sure, I missed out. Do I have any regrets? Absolutely not. I need to sleep at night. I need also to be happy, and I need to not worry about my investments. Bitcoin is one of those ones that if you did put money in there to buy one coin, well, that one coin is around what, 42 some $1,000s. Let's check and see what the actual rate is right now for Bitcoin. Yep, Bitcoin is definitely soaring higher. It looks like the rate is 41,921. That's as of 4:37 p.m. So if that is you, great. But for me, that's not for me. There are some securities out there like BITL, BETE, and BETH, where you're able to have exposure to that play, but not necessarily put out $42,000. For example, the security BITO is only 21 bucks. Sectors. So I stopped with consumer discretionary being up 41%. Industrials closed up 16% on the year. Materials closed up 10.66%. Financials closed up 10%. Financials had a big divot in the middle of the year towards the top, or specifically in the month of March, where there was an issue with liquidity with some of the smaller banks because the Fed was continuously raising their rates and they did not have enough cash flows on deposit to meet the Federal Reserve's requirements. So the Federal Reserve did come in and seize those particular institutions. That did drop the sector at that time because it was up 14% on the year. Financials is also going to be one to watch in the 2024 year because as they repair their balance sheet, they're going to become more profitable, which means that they will be producing more money. Real estate came back online at 9.55%. As you may recall, in the 2022 year, that was definitely another sector that was in lower numbers. Healthcare was flat on the year. Consumer staples closed down 2%. Energy closed up 4.58%. And utilities closed down 10%. You can go and look at the sector performance on either CNBC, you can go to MarketWatch, you can go to Fidelity.com, you can also go to Schwab.com. Any place that carries your financial data on the market will have information about the financial sectors. The 11 sectors out there in the market. The best way to use sector information for your gain is that if you see the sector continuously going up, or if you have a gut feeling that maybe perhaps the companies in this sector are going to have a banner year, that is your trade. I have spent the last 2 years convincing and telling people that they know more than they know, right? Investing is more about where you believe the value is. I don't have all the answers. You know some companies, you know some sectors that I don't. If that is the case and you are tied to the performance, or you maybe work in that sector, you become an expert in that sector on what it'll do and how it will perform. If you know that, use that for your advantage. Some people believe that they need to have a whole bunch of money to make a whole bunch of money in the market, but that's just simply not the case. That's not the case. You need a seed investment. It could be $50, it could be $100, it could be whatever you have access to, and put that in a company you know. And that's where you're going to get your gains. All right. I covered money market yields. We're going to go ahead and knock this off my list. Sectors, Bitcoin, bonds, I-bonds, yield today, market close. I covered my awesome books, and I covered my economic numbers. That's it. That's all I have for you for this last trading day in 2023. I hope and I wish for you to have many, many, many forward successes in the new year. Take the time to build a plan of what you would like to accomplish in the new year. Also, write down in on a sheet of paper, in your personal journal, or somewhere where you keep your thoughts, companies, ideas, trends, things you think are going to take off, things you think are going to fall apart, because that is where you're going to find your tradable investment. That's where you're going to find that you are your own investor and you do know a lot more than you give yourself credit for. Again, my name is Kyla P. Barnes. I am your financial chef and coach. Check out my books on Amazon.com under Pounds or Ounces, Your Financial Blueprint, or My $230 Habit. And I will see you in the 2024 year. You be bright, you be blessed, and prosperous.
Please leave your message after the beep. Yeah, trendsetter. Whoa, league of my own, it don't get better. No, read what I